Hey everybody, welcome back to another episode of Financial Friends. Today we are doing another update on the dividend journey, and let's just hop right into it. So we have some exciting news. We were able to add a position to the portfolio, and without further ado, that position is 3M. So we were able to add 3M into the portfolio. As you can see here, we picked up 0.14 shares, or that was roughly about $25 worth of the stock. So I'm super excited about that. And I just wanted to run over a quick couple of numbers and then show you a couple of numbers on 3M as well as the products that they have. And then we're going to touch on one very important thing, that is being the shares outstanding of a company. So let's start out the payout ratio of 3M. So we're going to be able to hop right into the stock here. We can see that the payout ratio is actually 57%, which is below that 60% that we'd like to see. We like to see that the company is not paying out all of its free cash flow, because that means, well, then they don't have free cash flow to do anything else with. So we want to make sure that they can pay us, but that they can also do some other things as well. The revenue growth of the stock has actually been pretty solid as well. Revenue growth is continuing to kind of be stable to growing, and this is a very, very large company. So we're not too concerned with that. We're also able to see the dividend growth here. So starting back in 2017 with the dividend per share, or a dividend every quarter of about $1.11. And we move all the way up here to around the time now, we have $1.48. So they are continuing to grow that dividend quarter over quarter. We also have the free cash flow of the business. It is continuing to grow. I did do some research on all of this prior to making this video. And we have a current PE ratio of, I know that information is stored in here somewhere. It is about 17. With the stock price changing today, might be a little bit different. Let's see here. Well, the PE ratio over the past 5 years, we can see, is 20.01. And if you're curious how I find information, we can just do a quick search. So here's a quick Google search. And this is, be careful of things like this. This was back in 2018. You don't want to just aimlessly look. Let's see if this will give us information without having to pay for it. A lot of times these websites will get you to try and pay. You could see here 17.63. And here's the chart over the past little bit. You could see PE ratios all the way back in 2017. So that's some useful information there. And they have a solid dividend score here on Track Your Dividends as well, which is something we look at. You can also take a look at profit margin. So here's actually the profit margin chart. I don't want to go over that too much, but you could see the percentages are down in the net margin region, and they bounce from about 9 and back all the way back in 2001 back up to 17% in 2020, and it kind of stays in that region. We're looking for above 10%, so we want to have above a 10% profit margin, so they have good margins there. And they also did some research on the current ratio of the stock, and that is 1.71. And the current ratio is their current assets over current liabilities. So it shows their ability to pay off liabilities within about the next year or so. And so 1.71 means they have more assets than liabilities. There's also a 1.6 net to debt EBITDA, which I think the ratio we were looking for there was below a 3. And so that fits that bill as well. As you can see, a dividend of 3.3%. This is not our highest dividend payer in the portfolio. We actually have O, ticker symbol O, or Realty Income Corporation, at about 4.2%. But that 3.3% yield is going to be big. And if we hop into the portfolio over here, you can see it's actually going to be our largest dividend payer as the portfolio sits. I did add $25 to the position, which makes this the largest position in the portfolio. We had some cash sitting in the account that I wanted to get rid of. But with an 82-cent annual income, it is going to be the biggest one. And we're going to add to some other positions next week to kind of even things back out. But a $5.92 payout over the course of the year if we had one full share. and a 3.3% dividend is solid. I also wanted to touch on our total annual income at the moment. You can see here it is at $3. I added all of these up because that rounds, and we're going to be at $3.13, which is a huge bump from, I think last week we were still in the $2 range, so that is awesome. We can take a look here at our sector diversification and kind of how this new purchase affects that. You can see we did gain a little bit more exposure to industrials and the sensitive sort of area as well. If we go by industry here, 3M is under conglomerates, which I feel like J&J would kind of be under conglomerate too, but they're a bit more focused in, obviously, as you can see here, the drug manufacturer, medical field. I do want to touch on one quick thing that has to do with the stock before we go back into 3M as a company, and that is going to be shares outstanding. So a big reason why you want to look at shares outstanding is because it directly impacts how much of the company that you as the investor own. Let's say there is 100 shares of a company out there, for easy math, and you own one of them. Well, you would own 1% of that company. However, if there were 100 shares out there and you own 5%, then you would own 5% of that company. But if out of the blue, that company issued way more shares, let's say they issued all the way up to 1,000 shares, and you still only owned 5, rather than owning 5% of the company, you would own 0.5% of the company. So you want to see the company doing share buybacks, or at least not issuing more shares. So as you can see here, back in, what year is this? 2016. This is how many quarterly shares were outstanding in 9/3 of 2016. And then you can go from here to 12/31, and they stayed the same. And then they decreased, a little increase here, but generally then around 2018, they did a ton of buybacks, buying back their own stock to increase the amount of ownership that each individual investor has in the company. Now you can see over the past few quarters a little bit of a bump here, but this looks like it's toward the end of 2020, so they're issuing some more shares. Not a huge concern to me, because you can see right back this next quarter, a bit more of a buyback, and this is a huge company. They've been around for a long time. You could see back in 2005 how many shares they had outstanding per quarter, all the way back down until now. That is just downward trend completely, and down here as well, the year-over-year growth. You could see they had some positive share issuance in and around this area, but as a whole, the chart is red, which in this case is good. It means they are taking shares back off the market. So something that I really, really love to talk about with companies is what they do, right? We always talk about stocks and their prices and how, that affects and ratios. Let's look at what the company actually does. Here it is. They sell a ton of products in a ton of industries. You have everything from abrasives to building materials, electrical equipment, dental and orthodontics, communications, medical, office supplies. Some things you might know 3M for just right off the bat would be, 3M strips, which is, wrong way, which is what is holding this hat up currently. One of them failed and is on the ground. SoFi hat is currently on the desk because it won't stay up there. But that's besides the point. Post-it notes, tape, they make all of these things. But in the grand scheme of things, they're also in medical, lubricants, film and sheeting. So they touch so many different businesses, so many different lives, so many different companies, and they played a huge role in the pandemic that has just happened and is continuing to happen in medical devices and PPE. And so this is something that many people will just turn a blind eye to. I love companies like this that are extremely diversified. As you can see here, this breaks down back in June of 2021, so just a couple of months ago, breaks down their net sales and their operating income. I'm going to move myself up here so we could see this a bit better. In the safety and industrial, transportation and electronics, healthcare and consumer. And look at their net sales. Relatively equal. They're not too over concentrated in one area. Obviously, safety and industrial up at 34% is going to be pretty big for them, and that that accounts for 33% of their operating income. But then you pop down here to transportation and electronics, 26%, 24%, and 16%. So they're not over concentrated or under concentrated in one specific area. And if we go back over to the products, you can see 19,664 products. That is insanity. And I know that I heard somewhere else there was like in the 30 something thousand. So this might not even be all of the products they sell. Again, I love these companies, especially when it comes to dividends and building out a nice diversified portfolio. Even if 3M had to knock one of its, massive industries it was playing in, whether that be safety and industrial or transportation and electronics, healthcare, they would still be fine over the long run. So this is why I'm investing in 3M. I think with the dividend yield, with the way the company is set up, it perfectly aligns with my values and the way that I sort of like to invest. And especially, again, I tend to have some growth positions elsewhere, but in a nice solid dividend portfolio, I absolutely love to see a well-diversified company that is buying back shares consistently and just overall has mass diversification and touches so many people's lives. It is a cash cow. So with that being said, 3M has been added to the portfolio. I was super excited to announce this, super excited to continue to build the position. Over this next week, we're going to look for some buying opportunities in a few different positions. If we can average down in any of those, it looks like we're currently down in 3M and in Johnson & Johnson. So we might look to buy a little bit of stock, maybe in each of those, as well as probably just add to our SCHD position and our FISROX position to help bolster the portfolio. We're still holding on to a little bit of cash, which I want to make sure gets into the market. So with that being said, if there's any one stock you would love for me to add some more cash to, let me know down in the comments. Let me know if there's any topics dividend-wise that you would like to see covered. I'd be happy to take some suggestions and touch on those in the next video. I also want to shout out all of the links in the description below. Please make sure to go check those out. I have started a Patreon, and I'm super active over on Twitter and Instagram, on Public as well. Go ahead and check me out there. So make sure to check out those links. If you enjoyed the video, leave the video a like. If you dislike the video, dislike the video. And if you want to continue to follow along on the dividend journey, make sure to subscribe. Take care, everybody.